Grant, how you doing?
Very good. Very good.
1031 app.
Yeah, we're a hat company, disguised as an investment platform. That's one of the jokes I like to say. Just like Mutiny Wallet is a t-shirt company.
I'm actually wearing a Mutiny t-shirt under this.
Exactly.
Raoul Bedford, we're representing everyone. I've got, I think I've accumulated about 5 hats now, by the way, secretly.
There's not many of them out there.
This is my special.
Yeah, I know where every single one of the camo hats.
How many were there?
There's less than 20 of them.
Whoa, we got 10% of the supply.
Yeah, you cannot rug us and inflate.
It's just like a shitcoin. They can be inflated, but I'm trying not to let that happen.
Did you just get a black one?
Yeah, I've got a camo one too. But I've got.
Is there a grey?
I brought that one for you. I brought that one for you, but I'll get you one too.
Is there a grey one as well, or is it just black and just?
Well, there is a gray one.
Have I got the grey one? I think I have.
I think you might. Yeah, I think you might be the only one with all colorways.
The problem with the grey one is I used to wear it at the gym every day, and then gradually I got that, that kind of like salt line.
Yeah, exactly.
You can't wash it out.
Yeah.
But I wear these all the time. My birthday, man. Gotta wear it. Anyway, how are you?
My birthday's coming up too.
Oh, is it?
Yeah.
We can't dox it.
I'm not going to dox it.
I don't even know what month we're in. Where are we? January? Jeez, guys, man. Well, good to see you, man. How you been?
You too. Yeah, all good. I'm very excited for 2024.
Yeah. What's buzzing for you?
It just feels like the setup is for a lot to happen this year, right? There's a lot of stuff happening, just macro backdrop. Everybody has been anticipating the halving. The ETFs, of course, just went live. There's a lot of anticipation for that. More institutions are coming in now. There's going to be a lot more eyeballs. There's going to be a lot more, the adoption happens in waves.
Yeah.
Feels like we're on the cusp of another big wave of adoption. So there's a lot to be excited about. And within our own business, we've been steadily building for now 4 years. Launched and deployed multiple funds. We're going to have more on the way. So very excited.
What's the market like for raising capital right now?
In general, it's very difficult. Think about not just the crypto blowups, right, with FTX and all the other carnage that we've seen, but broader VC. It's probably one of the worst times to be trying to fundraise or trying to have a venture capital business. I think that 2020, 2021, 2022 are going to be among the worst vintages of any year for VC. I mean, when you look in the broader tech landscape, a lot of the big tech firms, even if they were unicorns and went public, mass layoffs everywhere. I mean, AI is sort of like this threat to a lot of them. But if I think about where the interesting places to be investing or where are the safe places to hide, some people look at it that way. Like where can you deploy capital where there's long-term growth, there's defensibility, you're not at risk of disruption. There's not too many places. The two that come to mind for me are AI. Of course, there's a lot of hysteria and like everyone's excited about that. So that's where most of the people have like pivoted and flocked towards AI, and everyone, you're seeing like crazy fundraisings happening in that space. And that's probably a good thing for us because the other area is Bitcoin. And still, I'd say not many people are focusing on that with FTX and all the related carnage that happened there. Like we kept thinking that this is just validation of the strategy of focus on Bitcoin, and eventually more people will see that and more people will start to gravitate towards this and more capital will come in. But not really seeing that to a large degree. So I think AI might be sort of getting most of the attention, but that's probably a good thing. But those to me are the two areas that are more obvious of like where might you deploy capital that has longer term growth, exciting tech potential.
I think if Bitcoin gets over $69,000, a lot of people will start looking quite closely at it.
Yeah. Yeah. I think the capital inflows tend to be lagging indicator. We've seen it being in this space multiple years that the price goes, that drives a lot of the interest, but it tends to lag some. I mean, we're clearly significantly above the lows of where Bitcoin was, but I still don't think it's captured the attention of too many.
No, but you can kind of visualize the trajectory of it getting there. Each wave of adoption, we seem to jump into a new group, and yeah, I want to avoid talking too much about ETFs because that's all we've spoken about for 2 weeks, but there's a lot of signal that comes with that.
Yeah. I think the ETFs are exciting. I wrote an essay about it, I don't know, 6-7 months ago, actually, just about the ETFs, and it wasn't anything groundbreaking, but I remember when I went through the BlackRock S1 or whatever the SEC filing was, it was really interesting because you go through it and it has the usual tons of risk, like all the disclosures that a document like that would say, well, Bitcoin is risky and, people use it for bad things or whatever. But, for me, there was a lot of really interesting nuggets in the S1 that actually signaled, at least there's some people, maybe it's their advisors or maybe it's the people within BlackRock themselves. And at the time I was writing specifically about BlackRock, but of course there's, a dozen of these ETFs now that have gone live. But within those documents, it points out a lot of accurate technical specifications about how Bitcoin works and what it is and how it's secured. I was like, oh, this is really interesting that now this is in public filings that investors can review and financial advisors, everyone's going to be looking at. But what are the implications of the ETFs coming live? Well, for sure, there's going to be tons of capital inflows, right? Like people are going to want to get exposure to Bitcoin. Like hardcore Bitcoiners are going to say, well, that's not real Bitcoin.
Well, there's real Bitcoin being bought.
For sure. But yes, there's real Bitcoin being bought. But it's sort of inevitable that people are going to flock to sort of a traditional financial product like this because they want familiarity, they want convenience, and what they view as protections or assurances that like some of these big brand names will offer. But like the second order topic that I was thinking about when I wrote the essay, and it wasn't anything mind-blowing, was just, okay, it's going to attract more capital into the space. It's going to inevitably create more demand within the network. There's going to be more activity. There's going to actually be Bitcoin that's being purchased, right? It's going to create more network activity. And so what does that mean? It just means there's going to be more demand for products and services that are built on top of the network to increase the utility of it, to make it more efficient, to make it a better experience for people. So yeah. I think that has positive implications for us.
And when you're looking at these previous years that aren't good vintages for VC, what has driven that? Is it that most of the boom time was driven by these kind of low interest rates and cheap capital? Is it a lack of innovation because, I don't know, do we run out of things to invent and enough new things? Like what drives all this?
Well, I think a lot about it as low interest rates and cheap capital. Like that's right. A very simple thing to look at as a first order driver. I've thought about some of the terms that you hear in venture capital. Like if you go through and you're meeting a company, you often hear investors ask questions and use terminology that are pretty commonplace in this world, such as, what is your burn rate and what is your CAC, your customer acquisition cost? And if you think about it, look, I'm not expecting new early stage startup companies from day one to be profitable. So there is some relevance to those terms. There's a reason why people look at your customer acquisition costs and your lifetime value of a customer. It's to weigh, is the investment that you estimate it takes to acquire a new customer worth how much lifetime value or economic value you expect from that customer. But in a way, those terms are also kind of like very fiat. Like, what is your cash burn rate? And you're looking for an acceptable answer. Well, I'm burning $2 million a month. Well, that doesn't actually sound like a good idea. Like, oh, that's an acceptable rate that you should just be throwing away equity value. I think that's sort of, to me, I'm kind of interested in the idea of some of these things is just fiat has spread within this world, and customer acquisition costs. How much do you have to pay to get customers to come be your customers? Well, I think if you actually build a good product and a good service, maybe you shouldn't have to pay to have customers come want to use it. So, like, to me, some interesting things there. Again, with the caveat, I know that.
Hey, I'm a marketing guy. I mean, I'll argue back with you on this one.
Yes, I get it. I get it, right? Like, you want to build brand, you want to build awareness and trust with customers. But I do think that the underlying cause of a lot of the carnage that we will see, I don't think we've quite yet seen it with traditional VC, is from just fiat and money printing, easy money. We talk a lot about, I think we talked about on the last show, just this idea of growth at all costs. Like, that was the old world. And I think we will be evolving over time to one where companies think a lot more deliberately about creating sustainable business models and trying to generate profits and cash flow sooner.
Well, so it's quite interesting because I started to feel like VC had become a bit of a scam in this kind of like later stage capitalism phase of we've been going through. It started to look like that you would have these traditional rounds of investment, your seed round, Series A, B, all the way up. There'd be these inflating prices of the company, and by the time it gets to floating, the valuation would be very high for a company that may not have delivered any profit or deliver any profit. So most of the cream was going to be taken by those who've been in the rounds of investment. And it felt like sometimes there was a bit of a dump on retail. Like, I can only think of a bit like Snapchat. I think that felt like a dump on retail. I think perhaps Uber was. But it feels like that itself became a bit of a scam.
Mm-hmm. Yeah, look, that's a main reason why we don't really try to market ourselves, speaking of marketing, as a VC firm. We like to think of ourselves like the anti-VC, VC. And anything that I write or anything that we've written about ourselves, we traditionally just refer to us as an investment platform. I think that a lot of the old ways of investing are going to evolve quite significantly.
Because of the way capital will work.
Mm-hmm.
How far off do you think we are having VCs or funds which are Bitcoin denominated, or the investments are Bitcoin denominated, the returns are Bitcoin denominated?
I think we're very far from that.
Is there any kind of hybrid in there? Like, for example, our football club we have to do everything. Everything we do, we have. I should show you the way I track everything. But every line item in kind of my financial tracking, I have a Bitcoin and a pound column.
I think it's going to evolve gradually. We have this debate a lot with prospective investors, and it's a discussion topic for current investors about, can you outperform Bitcoin? Because the people who are considering investing in our fund oftentimes understand the tremendous upside potential that Bitcoin has in terms of purchasing power or price, however you want to call it. And so then they naturally ask, well, why should I invest with you guys instead of just holding Bitcoin, because Bitcoin's going to go up, enormous amounts. And then that raises the point about, well, can you outperform Bitcoin or can you not? And I think it pretty clearly the argument should be that you should, if you're taking on incremental risk, right? There's liquidity risk and execution risk. Can you do it is the ultimate question. I think we've talked about this before.
Will they do it? Would they even put the money in Bitcoin instead? Are they making that genuine either or choice? Because you're raising dollars.
Right. Well, would they? Agreed. I mean, that's one of the things we said is it shouldn't be either or. You should first definitely have some Bitcoin exposure. That the amount that you have is up to you. And then we think it's worthwhile to consider investing in the space. But that generally becomes the type of thought process that companies also go through. It's like, well, I could spend an incremental dollar on marketing, or I could buy Bitcoin, or I could, instead of burning cash, I could try to generate some incremental Bitcoin on my balance sheet rather than investing it in whatever initiative I think might be a good payout. So
That's time preference that we've, as Bitcoiners, have all adopted, right? Most of us are making decisions now about, shall I buy that car? Shall I buy Bitcoin? Or when I got my house,
yeah,
I got the largest mortgage possible with the biggest, like I was borrowing, because essentially that makes me short pounds and long Bitcoin. So they're the decisions we're making. You saying that it's exactly the same decision that we should be making for companies.
yes. It's ultimately, as you start to understand Bitcoin becomes the opportunity cost. Like that's another way of saying it. Bitcoin is the opportunity cost.
It's a fair point. Yeah, because I'm irresponsibly long personally. I'm conservatively long with every business I have.
Right. Well, it's understandable, right? I mean, I actually wrote a piece about this recently, just about Bitcoin treasury, mainly because the rationale for writing it was to express our evolution and what we've seen as companies' thought processes around like having Bitcoin in their treasury, especially because you're a Bitcoiner. Like Bitcoin companies are run typically by Bitcoiners who want as much Bitcoin as they can possibly get their hands on, but not many of them are holding that much Bitcoin on their balance sheet. And typically when we've invested in companies, even in 2020 and 2021, we were advising companies, well, hey, you should consider using some of the money to put some Bitcoin on your balance sheet. One of the obvious reasons is, well, you're already effectively long Bitcoin just by operating this market. So why not have that type of exposure on your balance sheet as well? But inherently, because of the volatility, that's a risky proposition for a company. Most of them who are burning cash, coming back to that.
Burn rate.
You typically, as an early stage venture-backed company, you're raising some money for a period of time, a year, 2 years, depends on what you're trying to do and what milestones you're trying to hit and what you're trying to build. But typically it's in that time zone. And then if you were to put a significant amount of that in Bitcoin and there's some volatility, well, all of a sudden your runway could get cut significantly. So that's risky. So what we would usually say is make sure you have at least 2 years worth of cash on your balance sheet. And then if you have some incremental from there, yeah, maybe it makes sense to buy some Bitcoin. Then obviously about a year ago, right, we saw SVB and other banking failures, and all of a sudden we were on the phone 24/7 with the companies that one weekend saying like, where's your cash and do you have access to it? Can you make payroll the next week?
Were the majority of your companies then banking with those banks?
No, it was a hodgepodge. There were some companies that had local relationships with credit unions. There were some that had SVB. There were some that had some of the other crypto banks that ultimately failed later.
Yeah,
it was like a hot potato. It was like landmines. We had this discussion. We do a portfolio retreat for all the companies every year. We've done it twice now. And this last year in October, one of the big discussion topics we had was banking relationships and just infrastructure for both banking and Bitcoin, and how can companies navigate what's ultimately a very challenging banking environment and share best practices for what's worked for them, and which banks are more open for business for the Bitcoin companies. But for the most part, we didn't have any real exposure there. I mean, even 1031, we had some cash at SVB, which we managed to get that off. But that was a tricky situation. So going through all of that, it became abundantly clear, well, the initial advice was, well, you should maybe consider having some Bitcoin beyond just your cash reserves to an additional layer, which is you should have a minimum of 2 to 3 months of reserves in Bitcoin, just in case you can't get access to your dollars. So that was the second line of thinking. And then the more recent one, which I've been thinking about is, okay, if you can meet those, which call that the holding 2 to 3 months of Bitcoin as sort of your near-term working capital needs is just in case something happens, and then 1 to 2 years, or let's call it 2 years of runway in cash, which you could decide maybe you don't do it just cash, maybe it's a mix of cash and Bitcoin, in which case my argument would be we should probably have a bit more than 2 years. Maybe you have 3 years if it's a mixture of cash and Bitcoin, but call that your medium-term reserves. The longer term, if you've met both of those two, maybe there's a line of thinking that says, well, you should have a percentage of your equity value in your business in Bitcoin. And maybe that can become this incremental way to benefit from the long-term appreciation that we all expect of Bitcoin, because you can look at any longer term hold period of Bitcoin, and it's going up significantly, right? Like we did a look back on every 4-year holding period since the 2012 halving. This is one of the companies that we're backing did this analysis and suggested that on average over every possible 4-year hold, Bitcoin's up since 2012, is up 100% a year. And the 95th percentile, so at the top end, you're up 165% a year. And the absolute lowest performance that you would have done is 25% a year. So if you have the capability to hold Bitcoin on your balance sheet and do it for a long period of time, where you can hold it for at least 4 years, then we should expect there to be long-term appreciation in your balance sheet. Now, why might that be interesting? Well, for one, that might be interesting because you could extend your runway, for example, and prevent having to raise money again or future dilution. Perhaps it's a way to increase like the ability to compete against an incumbent. Say you're this tech company that is emerging in the Bitcoin space, but you're going after the incumbent financial players, and those companies have not yet caught on to Bitcoin. They haven't started accumulating it. Hardly any companies do. And you can establish a major Bitcoin position on your balance sheet relative to them who might come in later. Now, all of a sudden, David versus Goliath, you have a much better chance because in the future, you're going to be much better capitalized.
Well, I can give you a great example of that. So, football team is we've accumulated 6 Bitcoin on the balance sheet, 6.5. I don't mind sharing that out. I think it's public on NVK's website anyway. At the moment, it's a couple $100,000-ish pounds. What's that? Yes, but yeah, it's about a couple £100,000. 10x on that, that's a couple of £1 million. There is 0 club with the entire non-league at our level, the 9th tier, that's going to have that. Now we're going to the 8th tier next year. No one's going to have that. Maybe there's nobody from tier 6 or below who's got that in savings. Might have some cash in the bank. And again, if we don't spend that, that suddenly becomes 20 million. Like, we're constantly leveling up against the teams around us. We have these stronger foundations that just sit behind what we do. So I fully understand that. I actually wish we could get a lot more Bitcoin on our balance sheet, because I don't think we can catch a Man United, because I think by the time they decide, we will still not have enough.
Depends when they decide.
Yeah, true.
Yeah, so what would be the arguments against it? Well, some people might say, well, if you're just allocating, like say you decide if you're going to raise a certain amount of money and you top up the amount you were going to raise just to buy Bitcoin. Well, does that mean that, well, you're sort of admitting that like maybe you can't outperform Bitcoin with the equity value of your company, or you don't have better ways to deploy capital into your business than just buying Bitcoin, or might the investors in your business just prefer to have that excess cash distributed to them, and they can decide if they want to buy Bitcoin themselves, rather than you just start to speculate on your balance sheet. I mean, I'm definitely not arguing that a balance sheet should just become a speculation on the price of Bitcoin, but
Otherwise, you're just the investor's custodian, essentially.
right.
Yeah, but in fairness, if you're holding your balance sheet in dollars, that is a speculation on what's going to happen with dollars.
right.
They're both speculation. Now.
Right.
You're speculating what's going to happen. Speculating of debasement versus appreciation.
Yeah. Yeah. So, but look, my argument was that I think if you can satisfy near-term and medium-term liquidity needs with a small amount of Bitcoin, in case things go bad, and some mix of cash and Bitcoin for the medium term, maybe there's a sweet spot of a longer-term Bitcoin position that you can hold that can appreciate in value enough that it's meaningful enough to your business. And I was throwing some numbers out there of roughly 10% of your equity value. So if you're a $10 million business, maybe you can target holding $1 million of Bitcoin. Or if you're a $500 million business, maybe you can target holding 50 million. That may not be easy to do right away in one fell swoop, but maybe it's a target that you can look to accumulate over time, because just based on the historical growth rates of Bitcoin, that would suggest that you can actually have a meaningful impact on your company's annual equity value growth just from the balance sheet alone, which I think is an interesting idea.
Does it get you to a point sometimes where maybe a company can't be acquired because of their Bitcoin has made them too valuable? So, for example, if you look at someone like MicroStrategy, Saylor hadn't done any of this. If somebody wanted to buy their data business, I don't know what the valuation would have been, $1 billion, $2 billion, $10 billion, whatever. Any idea?
Well, I mean, you can think when I looked at MicroStrategy as an example, actually, because they have roughly at the time, if I got the numbers right, a $10.5 billion market cap, of which $8 billion of their value was just Bitcoin held on the balance sheet. So you can sort of net off,
say, a couple of billion then.
right?
Yeah, they're like 8 billion right now. 9, yeah.
And with their business, it's a cash flow business. They generate about 50 million of annual cash. So apply a multiple to that. Or you could just do the division on the net value of the equity value relative to the Bitcoin and divide by their annual cash flow.
But I mean, pre-Bitcoin, somebody could have merged with MicroStrategy. There may come a time where their Bitcoin's worth so much, you can buy the assets of the business, but you can't buy the business as a whole because you cannot afford the Bitcoin. Well, Danny, can you scroll to the bottom? See if
I
we're still
think
there.
that's just a matter of purchase price. I think if you're buying a business that has an implied Bitcoin position, you buy the business, the price will reflect what's on their balance sheet, because that will come to you or that will get distributed out.
That needs updating.
But it is an interesting thought exercise, because this was the way I concluded the essay was suggesting, all right, let's say that as a company, you were able to accumulate enough of a Bitcoin position as an example that the value of it actually exceeded the amount of capital that you had raised from investors previously. And even the Goldilocks scenarios, you'd built your business, you had more Bitcoin on your balance sheet in purchasing power terms than you had raised from investors previously. So actually, the amount of money that you had raised, you actually have more now. And then you had built a business that perhaps is profitable. I mean, that I think will be a completely mind shift in how you think about valuing a business.
Could you even get to a point with some companies where it's almost not even worth running the company? Like, can the company fail, but the Bitcoin be so valuable and appreciate in value that you maybe have to spin off
Well,
the
I
idea
mean,
of the
if you
company?
went back to was that Bitcoin treasuries
Yeah,
that you
yeah,
had
let's
on the
put it back
screen?
up.
I mean, you can look and see if some of those ICOs, right, that
yeah, I mean, there's
that raise like a ton of Bitcoin, and I don't really know what's going on
yeah,
there.
look how
But
much
I mean, Block One.
Block
Yeah.
One have, yeah.
That is
So,
just ridiculous.
that's an example.
Yeah.
Jesus, 164. I remember that. That was that year long. It was a year long ICO,
Year-long
wasn't
ICO,
it?
Yeah.
It was like a daily.
Fucking Brock Pierce.
It was that other guy as well, Brendan. What's his name? Brendan Blum? I can't remember his name. We need to update them on this. But it's in, yeah. So, what, I mean, is this you're invested in a lot of companies and you're advising them. Is this like a live problem they're trying to figure out and solve? Or is this just more that you're thinking about it now?
Well, I was thinking about it more because of the evolution of our thinking, right? We were telling people, well, you should consider having some Bitcoin for the medium term. And then we were telling people, well, actually, you should definitely have some for the near term. Who knows what's going to happen now? And then it was more, okay, actually, maybe there's more to it. Maybe there's, as these companies are growing, maybe there's a much longer term approach to trying to have a Bitcoin position, and then all of a sudden you don't ever have to worry about capital again. So I don't think it's something that many of the companies are thinking about right now. In fact, I mean, in the paper, I say that ironically, most Bitcoin companies don't hold that much Bitcoin. I mean, when we went through our discussion at the portfolio retreat, most of the companies, it doesn't really matter if they're US versus international, but let's just use the US companies, for example. Most of them are still reliant and trying to navigate this, landmine of a backdrop for banking. And there's only a couple of them that you can point to and say, well, actually, they're just operating completely on a Bitcoin standard. And at the very end, we're having this discussion and someone raises their hand and is like, well, I encourage you all to shift to a Bitcoin standard because I haven't had to deal with any of these issues and things are going just well for us. So, but that's the exception right now.
Yeah. What are the tax implications here in the US? So in the UK, you if you hold Bitcoin on your balance sheet, you have to pay capital gains if you ever dispose of it.
Right.
Which is frustrating and annoying, but it is something you have to think about. So if you've got it, as working capital, each time, if you've done that clever thing and you still have to pay tax on it. Is it the same here?
Yeah, it's the same. I mean, they treat it as property, as a commodity. So
Yeah.
any transaction may or may not have capital gain or capital loss associated with it for now.
Yeah, and that's a tricky. In a small business, that becomes a little bit of a tricky thing in that if you leave it on the balance sheet, you have to pay capital gains. Well, actually, you have to pay two taxes because if you get paid in Bitcoin, so this is an interesting one. If I get paid in Bitcoin, I have to book the cash value at the time I was paid, and so then I have to pay corporation tax, and then I have to pay capital gains tax if it increases in price. And then if I disperse it to myself as a dividend, I then have to pay a personal dividend tax. Guess a lot can get chipped away of it very quickly.
Yeah, that's for sure. But if you're just holding it, there's no, at least here, there's no tax consequences of just holding it. And
You hope to hold it long enough.
if you decide to use it and you happen to have tax that you have to pay on it, well, that at least that implies that you have a gain.
Yeah. It's a real conundrum to think about. But I guess it's more of a problem if you're a kind of a small company, like a one-man band.
Yeah.
Because there are real tax implications about getting it right and timing it right.
Oh yeah, it's not easy. It's not easy just doing it personally, right?
Yeah, it's yeah. What about outside of this is Bitcoin companies we're talking about? I think we're all pretty aware that Apple sat with about $250 billion on their balance sheet in their treasury for a number of years. That's been inflating away. If they just started accumulating when Saylor did, they'd be in a pretty dope position.
Actually, I think I put them on my essay. If you can just see their cash and marketable securities. They got 165 billion. I mean, Amazon, Apple, Facebook, Google, they're all sitting on loads. And if you just look at it as a percentage of their equity value, it's sort of mid-single digits. The argument is, well, yeah, you're not really making much off that. I mean, they won't be holding it all in cash. Typically for mega corporations like that, they'll be investing in different securities, treasury bonds, et cetera. But the idea of holding some percentage, even if you can't get to 10%, and you're holding it in an asset that is appreciating at 100% on average over a 4-year period, then that that becomes something that eventually I think companies won't be able to ignore.
I mean, MicroStrategy's percentage of equity value, that'll go above 90% probably fairly soon. Like it's going to become basically the entire company.
Right. Yeah, you could probably do a historical graph on that. It's just been going up.
Yeah.
Why do these companies hold so much in their treasury? Is it a reserve? Is it because it's in lots of different foreign bank accounts and it's too expensive to bring the money back into the US? Is it because they're just too successful? They don't know what the hell to do with it?
It would be a mix of that for sure. I mean, if you got a global company like that, there's serious tax consequences for repatriating.
Yeah.
That like you wouldn't imagine you need that much cash for M&A or for major capital expenditures. So it'll be a mixed bag.
It'd be interesting because, again, this might be another thing that feeds off the back of the ETF beast in that, someone like a BlackRock might be thinking, well, why aren't we holding this in our treasury? We're recommending it to our clients. Our clients are seeing appreciating value. Why wouldn't we be doing it? Or even some of the people, like individual investors, may start to think about it for their companies. And the thing is, you talk about that 100% increase in value. We're still at a pretty flat point in the S curve. If everyone starts to realize the MicroStrategy trade, this could be way above 100% a year.
Mm-hmm. Yeah.
Yeah. Just fucking do it.
Yeah, we'll see. I think we're a ways off from there being significant accumulation by some of these big companies. I mean, of course, the last cycle you started, when you were seeing some of those announcements, those were quite shocking to see, right? When you saw Tesla and things like that. But
it's a shame they bottled it.
Yeah.
Yeah. But Square did it as well, didn't they? They put something. Was it 50 million?
Yeah, it was about 10% of the cash they had or something like that.
Yeah. It felt like there was going to be this kind of like chain reaction of more and more and more. I thought Tesla was the one that would really drive a bunch more to think about it.
Mm-hmm.
It's still I think the problem is it's still a scary asset for some people. I think there's still that 1, volatility, 2, regulatory fear, 3, I think some people just don't understand it.
Yeah. That's why I think that's part of the reason why the ETFs will be interesting to see what kind of impact they have, because it'll feel familiar to them. One of the things that you were seeing on TV over the last week was, oh, well, now you can buy $50 or $100 of it. You don't have to spend $40,000 on a Bitcoin. It's like, hey, that was always the case. But
that is true.
Yeah.
If you open up your brokerage account, you can see it's $50 for a share of Bitcoin. Because some people would say, how do you buy shares of Bitcoin? Like people ask that question. I don't know if you ever get that.
Yeah, for sure.
Yeah, can I buy some shares of Bitcoin?
Mm-hmm.
Yeah, so rather than seeing that 44,000, or where are we now, Danny?
Something like that.
Yeah.
44,000.
Oh, we are?
About.
Rather than say they can buy $50 worth. I mean, it changes a lot. I know it's something like my dad's, I was thinking about dad. In my dad's mind, that would be like, yeah, that's a lot easier to understand.
I think 2024 is going to be a really interesting year. I mean, I sort of think of the free market as this release valve, right? You guys have been talking about scaling Bitcoin. I think that the next wave of adoption, like sometimes I wonder, like, are the Bitcoin companies, are they actually ready for it? And
what do you mean by that? That's interesting.
Well, just in every sense, like, is the UX there? The company is ready to scale the number of users, 10x so what they are today. And it sort of reminds me of, well, were people ready for the mempools being very full and transaction fees being as high as they are? They probably weren't really ready. There weren't too many companies or groups that were planning ahead for that type of environment. I mean, that was one of the things that we were expecting, and a theme that we were investing behind. But for the most part, people weren't really ready for it. But that creates this pressure that ultimately the free market becomes a release valve. And that's where I think the innovation happens.
That pressure's your opportunity.
Right. That's for any capitalist, right? Any entrepreneur who wants to build something to relieve some pressure. That's what I'm excited for that, because the next wave of adoption comes and Bitcoin users and demand increases by 10x or more. Well, are the companies going to be ready for it? I'm not sure, but that's going to create opportunity for someone, if they're not, to relieve that pressure.
There's a good lens with what happened with the internet, because it's not just a company. It's like you're really talking about companies and infrastructure. And so, is the network ready, and are the companies ready? And it's a bit like I remember that first internet boom, because I worked through it, right? That's when I first started playing around with HTML.
Mm-hmm.
And so you had a lot of investment going into these e-commerce companies, but we had two issues. One, not a lot of people were on broadband back at that time. A lot of people on 56 dial-up or ISDN. Things were quite slow. And then some of the companies weren't ready. So I remember specifically a fashion retailer called boo.com. They've raised 200 million or whatever. And they had this amazing website where it's built in Flash and you could rotate the models to look at the clothes and buy them. It was so slow that people gave up with it.
Mm-hmm.
So they weren't ready in terms of the infrastructure wasn't ready because it wasn't fast enough. The technology wasn't ready. The company hadn't learned how people wanted to buy stuff online. We still don't have that because people don't really want it. They just want good pictures.
Mm-hmm.
So there was a whole bunch of things. And I think you're basically saying that. Is the network ready? No, that's the valve release for the free market. But also, are some of the actual companies ready? Are they really ready?
Right.
Is the community ready?
Right. And I think it's just like anything in the world, right? Your body responds to stress. You grow, right? Growth comes from stress. And I think that's going to be the case for the market. And I've been trying to challenge the companies that we work with, saying, you know what the next bull market is like. Everyone who's trying to get access to your products, your services, all of a sudden the network infrastructure goes down, and people are clamoring to get access from wherever they can get access to it. And that's going to come. So you need to understand what is the throughput that you can handle through your pipes, because if you don't provide that release valve, someone else is going to.
Yeah.
What kind of companies are you excited for next cycle? Where are you looking specifically?
Well, I mean, that's hard to.
I don't mean name names, but what kind of area?
It's hard to pick a favorite, but I think an emerging area, right? I think we talked about this on the last show, but really interested in this theme of companies, traditional technology companies coming into Bitcoin.
Same conversation we had the other day, didn't we?
Mm-hmm.
Yeah. I mean, we're gonna be investing across the Bitcoin landscape. We do everything from traditional financial services, mining, Lightning, consumer applications. We do hardware. Most others don't even look at hardware, but we do it all because we think there's merit from an investment perspective to all of it. And we're hardcore Bitcoiners and we want to see the infrastructure improve broadly. But I do think there's going to be examples of companies that are coming into the space from outside of Bitcoin that are looking to have a Bitcoin strategy, that are looking to put Bitcoin on their balance sheet, or looking to incorporate Bitcoin into their business in some way. Is that going to happen this year in a meaningful way? I don't know. I would probably be surprised if it's in a meaningful way this year, but it's coming, and I'm very excited to see that.
With companies like Primal, I know you guys invest in them. I love Primal. I use it all the time. But why would you invest in a company when the customers can just flip on like a dime? They have no real customers, right?
Yeah, well, I think that's a good question because it's not intuitive. Why would you? It's almost like saying, well, why would you invest in an open source business? Which that was one of the coolest things that Primal did, is open source their full stack. A lot of people will question, well, why would you invest in an open source business?
But it's not even just that. It's the fact that you can just, take your private keys and go to any other platform and you don't really lose anything. And maybe the functionality is slightly different, but you take everyone with you.
Yeah. Well, we think that regardless of that aspect of their specific business, but in general, with open source businesses, that there is a way to monetize in an ethical way, to create value within your business, to create a loyal brand, a loyal following of customers, and doing that with the best experience. That can be a really interesting prospect, because a lot of these businesses, what people don't appreciate is like building within an open network like Bitcoin, there can produce not just the network effects to your own business, but to the broader space. And I look at it as a little bit of a contrarian take on investing in those kind of businesses, which most people would think, well, I'm not really sure. I don't really understand how that makes sense. But Nostr is one where we've been looking at that landscape for a while. I think there's really exciting things happening there. It's tough to pick through where, from an investment standpoint, there might be interesting propositions just to invest from an economic perspective. But Primal is one where we thought it would be quite compelling.
Well, listen, I've got a few things I want to ask you about. I want to ask you about them off screen. I don't want to do it on mic. All right. Well, listen, everything you've done with 1031 is great. I think you should do a lot more caps.
But not of this kind.
I want the full set. I definitely want the full set. I think what you're doing is amazing. And you named the fund after my birthday. So I think that's pretty cool.
That's right.
That's pretty cool. Grant, love everything you're doing. Appreciate you coming in. Let's chat later.
I appreciate you guys.
Thank you.
Thank you.